Welcome back to Asia Tonight. It's time for your business news now. And central banks have been slashing those interest rates to try to ease the impact of COVID-19. Australia has cut rates to a historic low of 0.25%. Meantime, Taiwan's policy rate has been cut for the first time since 2016, below a predicted rate of 1.25%. The Philippines has also trimmed borrowing costs by a larger than expected half a percentage point. It's now sitting at 3.25%. Indonesia's central bank, too, has got in on this action. It's cut its benchmark rate by a quarter point to 4.5%, and it's the second cut that we've seen this year, bear in mind, taking rates to their lowest level that we've seen since May of 2018. Now, despite the central bank action, nearly every stock market in Asia has ended the day in the red today. A trading halt was triggered, in fact, in Manila, as after the Philippine PSE crashed by as much as 24% at one point in the trading day. That's its lowest level that we've seen in more than 8 years. A similar circuit breaker has been triggered 4 times this month over in the United States. Rajiv De Mello from the Investment Association of Singapore explains just why these trading halts are necessary.
You need to have a market functioning for price discovery. But in the past major market dislocations over the last 30 years, there have been lessons learned about circuit breakers. And we've seen in the US and the S&P, circuit breakers go off quite frequently. And that's in response to very large one-sided trades, panic moves as well. Because we also know that on the other side there is a lot of robot trading going on, algo trading, which is maybe exacerbating the moves. So by implementing some stops from time to time, it does give the market some time to pause and think. But it's a very difficult balance.